Hello everyone, my name is Steve Killingsworth. I am an investor here in Michigan and I'm looking to invest in a self-storage facility, either through purchasing a self-storage facility, myself and a group of investors, or investing as a limited partner in a self-storage deal. And right now, coming off of 2021, a record-breaking year for self-storage performance, it seems as nothing can go wrong for self-storage. All systems are go. Private equity is lined up. Investors such as myself are actively looking and making offers on facilities. And the reason is because self-storage historically has performed very well, and recently it has performed exceptionally well, all-time highs. So with everything going so great, there's always a downside risk to the deal, to the investment we are in or want to be in. The risk are usually things we don't know and don't understand. And that led me to today's video. I want to cover rising interest rates. But Steve, I'm buying a self-storage facility. What does rising interest rates have to do with me buying a facility? It's so easy. All I do is move people in, charge rents, they stay forever, and then I sell in a few years and make a ton of money. So what could go wrong? Well, what can go wrong is interest rates moving, which can negatively impact your self-storage valuation when it comes time to sell. And then I saw an article titled from Bloomberg, and the headline was "Credit Costs Soar. Investors are scrambling as borrowing costs increase." In Europe, borrowing from prime borrowers, exceeded 1% for the first time since July 2020. So the world's finest borrowers, stellar credit, greatest balance sheets, they now have to pay above 1%. It was also noted that the junk market window is now closed. So companies that are junk rated and rely on debt, they're locked in to their high interest rates expense. They're no longer at the moment able to refinance out. So that puts them at more risk, as they cannot refinance out and pay lower interest if that was their plan to, part of their strategic plan was to refi out and sell their business. Costs to protect against defaults is surging. For example, the example they gave here, last week, it would cost $58,800 to insure a $10 million bond. Now, 1 week later, that has gone to 68,000 euros to insure a $10 million bond. That's a 12% move in 1 week. That's how fast things can change. The jobs report that came out last Friday also added to the fear of rising interest rates. The Fed has said they're going to raise interest rates 4 times this year, and perhaps some investors were hoping that a weak jobs report would take the probability of that down a little bit, but that is not going to be the case. Bloomberg also noted that the speed of the moves caught analysts by surprise. They were flat-footed. They also noted that investors were showing signs of caution before. So it looks like there's a little disconnect between the analysts and the investors. It sounds like the investors were already seeing what was going to be coming as far as credit cost and anticipating this jobs report, but the analysts were surprised. The U.S. credit markets are showing signs of stress, and the example they gave was high-grade spreads are the widest since November of 2020. So what is high-grade spread? What does that mean? Well, junk bonds, lower credit-worthy borrowers, the amount that they pay versus another benchmark 2-year or 10-year treasury. That spread measures how much investors are willing to pay for the riskier assets. And increasing spreads can signal weakening macro conditions, okay? So the bond market, the bond guys, the bond traders, they have to be the smartest investors in the room. They need to make sure they get their principal and their interest every month. They're very in tune to what's going on from a macro sense, and we need to listen to what the bond market's saying and what they're doing, because it can eventually come down to the level of self-storage through valuations, higher interest expense, and just overall higher risk. That's all I have for you today. Go Blue.